Okay, I think we're ready to rock and roll. So, before we get started, we got to start off with the legal stuff. Basically, what we're covering in today's session and upcoming lessons, educational purposes only. So, you take some time to read this, or if you prefer, you can go to the site. I believe we have the full statement there. Okay, gang, I want to say thank you. We got people from all around the world here today, and I just want to say thank you for your time that you're investing with me. And over the next couple lessons, I'm going to show you how I went from a struggling trader to a consistently profitable trader. I'm going to give you some key pointers that I hope you can employ in your trading immediately. That is, at least that's my hope for you from the lessons that we're going to cover this week. There are going to be 4 lessons, and we'll do a summary of those here in a second. Gang, I'm sure some of you here are wondering, why should you listen to me? Honestly, gang, I've been where you are. I struggled for years to find an edge in the markets. I had losing days, weeks, heck, even months that left me wondering, why in the hell did I ever think that I could trade for a living? I bought all the systems, I read all the books, watched the free training, just like you, and yet somehow I still lost money. So I came from the world of finance, and from there I ventured into real estate investing. I met a mentor along the way. He trained me how to trade options. And it was this man who actually caused me to catch the trading bug. You know the one that we all have. We just can't get enough of this to figure out the markets. Guys, I actually thought that my prior career success would translate directly into trading success. I was wrong. I didn't get it. I couldn't figure out why. What was I missing? So guys, I finally decided to take a step back. I had to ask myself, what made me successful in my other endeavors that wasn't translating into trading? What I realized is it actually has nothing to do with intelligence. So let's analyze my banking career, for example. So my boss's boss was actually my mentor in banking. And it was this man who'd spent 20 years in banking who outlined a step-by-step process, how he drives business, how he talks to prospective clients, and even how to follow up on calls. So when I look at banking, I had a mentor, right? Someone who guided my decision making along the way. So then let's analyze my real estate business. I actually invested $2,000 in a real estate course. So right there, let's start with, I bought a system. Now I became friends with the teacher of this course, and I literally followed his course step by step. And gang, I actually made over $250,000 in 12 months. I'm sure some of you are wondering, why in the hell aren't you still doing real estate? Well, I'll tell you. So my part of that money was just over $100,000. I had a partner in the deal. And in order to make that $100,000, I actually was working about 80 hours a week. Because in real estate, most people can only meet you in the evenings. Well, that meant little sleep for me, and with a new family, gang, there was no way that lifestyle was sustainable, at least for me. Okay, so now finally, let's take a look at my options business. So I already told you that I had a mentor when it came to options. He invested some time with me, and he actually also invested $50,000 to learn from some of the best option traders in Chicago. So he bought a system, and then he was kind enough to spend some time with me. So in options, I had a mentor and a system. You see, what I realized was it was a combination of a couple things. My desire to win and humility. That's what made me successful in my other endeavors. So let's look at my trading business. I have to admit, it was just the opposite. I didn't have a system. I did have an ego, and that ego was quickly humbled by the markets. I don't even like admitting this, but I actually spent $10,000 on a system. Well, I should say quote unquote system. It was just a set of indicators. There was no specific what we call rules of engagement, or ROE. And those are rules that use an if-then thought process for placing trades. You guys know what the if-then thought process is, right? I mean, it truly is the most basic thought process that we use. Here's an example. If you're driving a car and you happen to see a stop sign, then you go for the brake. An example for me, if I'm buying a house, then it must meet my specific purchase criteria. What I found is when I didn't follow my rules, I always struggled. For example, here's one that's near and dear to my heart because it's very recent. Just last year in my real estate business, because I was busy on my trading business, I became flexible in my rules. Guys, I paid the price. I lost over $30,000 last year in real estate. So just like a bad trade, I lost. I took a hit. Now, unlike a bad trade, I lost 30 grand. So over the next couple lessons, you're going to see why I now focus exclusively on my trading business. And finally, gang, I had to believe in myself, and I had to have a system that I had full belief in. Because I didn't have that system at the time, I made a decision to go directly to sim trading until I had rules that I could follow and prove that I could follow them with extreme discipline. Gang, this was my turning point in trading. At this point, I knew that I would be successful. So there's an old proverb, not sure if you guys have heard of it, but here's what it says. When the student is ready, the teacher will appear. So 5 years ago, I had no idea what this meant. It was my ego that caused the majority of my difficulties. So what I learned was, guys, everything that I needed, it was right in front of me. But I wasn't ready to hear it. I thought I actually had this attitude that I can do it better. This attitude cost me not just a lot of money, but gang, more importantly, it cost me time. I mean, that's the one thing in life that none of us can get back. The market forced me to be humble. It brought me to my knees, literally. And it was at this point that I actually began focusing strictly on price. So gang, over the next couple lessons, I'm going to show you the exact steps that I took to go from a struggling trader blowing out 2 accounts to a full-time, consistently profitable professional trader. Be sure, gang, I want you to stay engaged with me. Write down your questions. At the end of our time together, I promise it's going to change the way that you look at the markets. Let's get started with my 4 keys. So in lesson 1, we're going to talk about trading with the bigs. This is going to be a combination of what we call an NTO, or a new trader orientation. Basically, I'm going to walk you through the PPT system. I'm going to train you on the power of market structure. My goal here is that I can help you stay on the right side of the trend, develop an objective way to determine that trend. This is truly what changed my personal trading and helped me overcome that trading anxiety and skipping those winning trades. You guys know those trades I'm talking about, right? Where your finger is literally on the mouse button and you see a trade, but you just can't execute the trade. And then you see the price go in your favor and you are left frustrated. We need to end that frustration. Again, in lesson 2, I'm going to show you how to bring structure to that chaos that we call the market. Do you have a step-by-step, if this, then that trading plan? If not, why not? Gang, this is important. It's a must if you ever want to find consistency in your trading. After all, think about it. How can you expect to improve on something that you can't measure? In fact, gang, in lesson 2, I'm going to give you all as a gift a free trading plan that will help you develop that process, that if-then thought process. In lesson 3, gang, this is my personal favorite, And frankly, it's the only reason that I'm still trading today and not working a 9 to 5. I believe this is the only holy grail in trading. I'm going to give you one clue for now. It has nothing to do with indicators. And then finally, in lesson 4, gang, this is all about treating your trading as a business. That's what we're here for, right? You can either have a hobby or you can have a business. You have to know your numbers if you want to be consistently profitable. In addition, we're going to learn how to increase your position size and how that can have a dramatic result on your profits. Gang, I have traders with me now who just 4 months ago were trading 1 contract. They're currently trading 6. That is powerful. And in fact, just think about if you were averaging $400 a week with 1 contract, you can now average $2,400 a week taking the same trades. Imagine that. What would $2,400 a week do for you and your family? Now, we don't do that every week, okay? But what if you could average half of that over the year? Gang, that's still $5K a month. So before I want to go on, gang, I just want to make a point. I just want to say I know this is a lot of information, all right? I'm going to try and go at a pace that allows each and every one of you to get the most out of these free lessons. Guys, this is my way of just saying a big thank you for spending time with me. Let's get started. All right, Price Pattern Trader, PPT. Let's start with what we're going to learn in this lesson. So here's what we're going to talk about, gang. What moves the markets? How I read market structure. How to quickly identify if a market is trending or moving sideways. And finally, what is support and resistance? So let's start with the most basic thing here. What moves the markets? Has anyone heard of the auction market theory? Gang, for anyone who's taken an economics class, or even if you haven't, you've probably heard about supply and demand for goods. So this is the most basic form in the market, okay, gang? When demand exceeds supply, prices will rise. Let me give you an example. Imagine yourself, you're buying a car, you're at an auto auction. Why do you think they set the opening bid at auction so low? They want to drive demand. So as that opening bid hits, you have a feeding frenzy on price. That pushes price higher. The higher price goes, the fewer participants there are willing to pay that higher price until there's one man left. He's the big winner. He gets to take that car home. Okay, let's look at the other end of the equation. What happens when supply exceeds demand? Well, gang, prices will fall. Let me give you a recent example. I'm sure that we remember this. The 2008 housing bubble. Well, what led up to that bubble? Gang, everybody and their dog started building houses. That saturated the market. We had an oversupply of homes. As the demand fell, house prices plummeted. Builders quit building, and the prices dropped until the supply was bought up at the lower prices, and then the demand picked back up, driving prices higher. Okay, this is just the basics of the market. Gang, the stock market's no different. Okay, as price auctions higher, there are fewer and fewer participants willing to pay that higher price. Now, what happens when both buyers and sellers agree on price? Well, that's when we get what we call consolidation, or a sideways moving market. So let's talk about the different directions that the market can move. It can do 3 things, right? I mean, it can move up, move down, or it can go sideways. Now, guys, I know this seems basic, but my point here is that you need to have an objective way to define each one of these. I'm curious, and I want some participation from you all. Make sure you're awake. How many of you have rules to define the trend? Type in a Y for yes and N for no. Be honest with yourselves. Okay, I'm seeing some honesty this morning. All right. I'd say it's just a little bit over half are saying yes. Okay, gang, that is fantastic. Okay, gang, so being able to be on the right side of the trend is what you can use to help. It'll help you develop an edge in your trading. Now, keep in mind, we don't even have to be right 50% of the time, right? I mean, we can be right under 50% and still make good money. But it's so critical that you have that if-then thought process. So what does an uptrend look like? Well, here's a basic uptrend. So let's fill this in. So here's how I view this. Here's the structure from your prior downtrend. Here's what you can call an initial thrust, or some people might call it an impulse move. From here, you're going to be looking for a higher low, and then you have your higher high. And it's at this point, once that structure from the downtrend is broken, that I consider the uptrend to be confirmed. And then from here, you expect to have a higher low and another higher high. So it's easy to see on the picture, gang. Let's look at an actual price chart. So here's a basic price chart, gang. Let's locate that structure from the prior downtrend. It's right here. Now, in the PPT world, we would call this an LCP. I'll talk more about that in a minute. From here, price puts in a higher low. So we have our structure from the prior downtrend. Price puts in a higher low, and then we get the higher high. And that higher high breaks that prior structure. At this point, you can see uptrend confirmed, and then price puts in another higher low, and then another series of higher highs and higher lows. Okay, now let's look at the other side, the downtrend. Same picture, just the opposite. Here's my structure from the prior uptrend. We have the initial thrust, or the impulse move. We get a lower high and a lower low, and at this point, uptrend is off and downtrend is confirmed. Then again, you expect price to put in a series of lower highs and lower lows. So now let's go take a look at a price chart. Okay, here's our structure from the prior uptrend. Price puts in a lower high right there. Then we got a lower low, and this lower low breaks through the structure from the uptrend. At this point, downtrend confirmed. And then again, we get another series of lower highs and lower lows. And gang, for now, the way that I choose the lower highs and lower lows, again, they're what we call LCP, or last confirmed pivot. And later in this lesson, I'm going to introduce you guys to a powerful indicator that I use to objectively identify these. So now let's take a look at a sideways market. Gang, where's the trend? You can see we have a series of, well, there's not even a series. We have a higher low, a higher high, but then immediately we're followed by a lower low and a lower high. So how many of you have tried to trade this type of market? I mean, I know I have. If you were like me, you're the guy that would sell the low, buy the high. So now I recognize these just strictly resistance and support. And getting the cool part, the PPT system actually combines these zones of support and resistance with specific price patterns. There's only 2 of them. And that's what gives the PPT system a repeatable edge in trading. In fact, guys, that's all successful traders do. Think about it. They find an edge in the market, they exploit it over and over. That's how they achieve consistent success in the markets. So let's move on and actually discuss support. What is support? Now, remember a few slides ago, we talked about supply and demand. So if we're discussing support, is that supply or demand? Gang, support is going to be an area of demand. So it's a past level where buyers pushed prices higher. There was an over demand at that lower price. So when price comes back into that level, we're going to expect it to either be confirmed, meaning buyers are going to step back in and move price higher, or they can wipe it out and break right through it. If that's the case, we can look for that support to actually act as resistance. So let's take a look at an example. Here's an example of where you had an over demand for the prices. And you can see how price was pushed higher through here. And then as price worked its way back down, again price consolidates, and the over demand, they're accumulating shares at this lower price, pushing prices higher. So now let's take a look at a chart where the demand level, support level, is actually pierced, and then it becomes resistance. So again, back here is where the buyers stepped in, pushing prices higher. They come down right through that support, and then price turns around, comes back into a resistance area, which you can see this area right here is where they really started pushing prices down. You see? All they did was come back into that area and then continue on to make a lower low. Now let's take a look at resistance. So resistance is going to be the opposite of support. It's actually going to be a supply area where prices had been rejected in the past and sellers pushed prices down. So as we come back into that area, we're going to expect it to either be confirmed, meaning that sellers will step back in, or they're going to push right through it, wipe out the resistance, and then we look for that resistance to become support. Okay, let's look at an example. Here's your resistance level where prices were pushed down lower. Price moves back into it, actually fairly aggressively. They come in and hit it, and then they push down to make lower lows. Now here's an example of where the resistance actually becomes support. So back here we had a resistance area that was breached, and as they pushed back into the prior resistance area, buyers step in and start accumulating, pushing prices up to new highs. Gang, here's the difference between what you're going to see on these charts and what you'll see with PPT. On this chart, you can find many opportunities that you can trade from. Now, for people who are trading, looking for excitement, gang, I urge you to actually find a different career, because if you are looking for excitement in trading, what's going to end up happening? You're going to overtrade. You're going to blow your account. Instead, what we preach is the power of patience, waiting for price to come to you and follow your rules. See the trade, trade the trade, and then once that trade is over, just wait for the next one to set up. So let's move into the PPT system and the power of multi-time frame trading. So we just use two charts. Have a high time frame chart, which we call the HTF, and then a trading time frame chart, which we call the TTF. So for example, on our swing trading service, the high time frame chart is actually going to be a weekly chart. That's what we use to identify the trend. And the trading time frame chart is actually going to be a daily chart. That's what we use to execute the trades. Then on day trading, the high time frame is what's called a 12 range chart. Now, a 12 range, all that means is prices moved 12 ticks, hence the term range. So every 12 ticks, you get a new bar. That's the high time frame. Then the trading time frame is what's called a 233 tick chart. That's what we use to execute the trades. So what I found was trading with the high time frame trend helped me develop an edge. So I'm curious, and please engage with me again, gang. I appreciate it last time. How many of you all trade with a higher time frame chart, using that as for your trend? Put a yes in the box for put a Y in the box for a yes and an N for a no. Oh, great. Looks like the majority of us are using a high time frame chart. All right, nice job, guys. Guys, if here's one thing I found early on in my trading. When I would focus just on a trading time frame chart, I would see like an 8-tick move, and I would think it was actually a large move. I'd be like, whoa, what happened? But then you look at a higher time frame chart, and it doesn't even you can't even see that 8-tick move on a higher time frame chart. So it actually reduces the number of trades that you're going to take, which is a good thing. So let's dig a little bit further into the PPT system. There are 3 powerful setups that our clients learn. We have a trend continuation trade. We have what's called a deep retrace, and this is the most popular one that we will see. And it has 2 specific patterns: a money pattern and what's called a weaker high-low pattern. So the weaker high will be if you're looking for a short. The weaker low would be if you're looking for a long. And then finally, what's called a momentum trade. And gang, let's get into the true backbone of this system, and that's what's called the LCP zones. LCP stands for last confirmed pivot. There's only 2 of them. You have an LCP bid zone, which will be a buy zone. And here's what that's used for. It's used to ID the trend on the high time frame. And I'm going to show you an example here in a minute. It's used for trade location on the trading time frame. And then it's also used as a line in the sand for the deep retrace trade. Okay, now let's look at the offer zone. It's just going to be the opposite. It's used to ID the trend on the high time frame. It's used for trade location on the trading time frame. And it's used as a line in the sand for the deep retrace short trade. Gang, here's the key. These LCP zones actually guide all of my trading decisions. Let me show you some examples. So here's a basic high time frame chart. You can see this on this chart. I have an LCP bid zone. I do not have an offer zone. So there's only 4 scenarios that we can have. The first one, I can have a bid zone with no offer zone. It means I want to look for longs only. I can have an offer zone with no bid zone. I want to look for shorts only. I can have a bid zone and an offer zone. In that case, I would want to look to be long in the bid and short in the offer. And then finally, I could have a chart that has no zones. At that point, I just want to be sitting on my hands. Let's go look at a trading time frame chart and see what it looks like on a trading time frame. So here's a basic trading time frame chart, gang. Here, all you see on here are just 3 indicators. You have the PPT PriceBands, which are these. You got the outer band in red and blue, and then the mid band right here in the middle. You have these little dots that you see over price. Those are called the fib trail dots. I use those for trade management. And then on the bottom, you have what's called the PPT Stochastic. And I'll get into all of these here in a minute. But gang, for now, what I want you to focus on is, let me just walk you through, well, what a typical day would have looked like for me, 3 years ago. So here we have a little consolidation pattern over here. We get a little breakout. Maybe I'm going to get long here, right? So I jump in here long. Price consolidates. I get out because I get scared, right? Price jumps back up. I get long, make some money here. So price starts going down. I get long here. Price goes up. I move to break even because I made a few ticks, and I get stopped out at break even. And then I do it again. And guys, by this point in time, I would have already made 4 or 5 trades. Frankly, trading was exhausting. At this point, guys, I just sit back and I wait for price to come into one of my zones. Here's a bid zone. Price comes into the bid zone, and at this point, I would look for a trend continuation trade, and price comes up and pushes to new highs. Guys, the key here is stop looking for the opportunities. Force the market to play by your rules. This is what will help you remain calm and focused throughout the trading day. So let's talk about those PPT price bands. Okay, here's what they do, guys. They help you spot market structure. You can use them on any instrument, any time frame. You can use them on stock trading for weekly charts, daily charts, hourly charts. If the market structure is bullish, they're going to be stair-stepping higher. Okay? If the market structure is bearish, they will be stair-stepping lower. So now let's look at one more indicator, and that is the PPT Stochastic. So guys, all a stochastic indicator is, it's a momentum indicator and it oscillates between 0 and 100. And it's calculated based off of where each bar closes in relation to its high or low. That's how it's gauging the momentum. So you have two lines. You have your blue line, which is your fast line. It's called %K. You have your red line, and it's the slow line called %D. So when %K and %D, or just one of them, is over this black line, which is 75, prices are said to be overbought, and you would look for a potential correction. And then on the flip side, when your stochastic is below purple, price is said to be oversold, and you can look for buyers. Now, I don't use it exclusively for these just oversold and overbought areas. Okay, what I use it for actually is I look for shifts in this to help me confirm the LCP zones, to help me confirm my patterns on the deep retrace trades. Now, gang, look, I know this could feel overwhelming, but believe me, it's actually really simple once you go through a few lessons. And this is an indicator that I promise that you will actually come to love. Let's do a quick recap on what we discussed here in lesson 1. So I showed you how I objectively identify if a market is trending or moving sideways. I showed you how I look at support and resistance. I showed you the 3 powerful setups that our clients learn in the PPT system. And then I also showed you the LCP zones and how they guide all of my decision making. So now let's take a look at lesson 2 and what you can expect to learn in lesson 2. My aha moment was systematic trading. Yeah, I'll give you a clue. I actually was focused on the wrong trading statistics. Do you know what stats to focus on in your trading business? I'm curious. We're going to talk about that. What defines an edge? Have you all heard of the term expectancy? We're going to get into detail on that. We're going to talk about the PPT system edge. And also, one of my favorites, how you can build your own edge in trading. Gang, I want you to imagine something. Imagine feeling relaxed behind the machine. Imagine knowing where that next trade is. Guys, it wasn't long ago that I could not imagine that feeling myself. Now I consistently trade 6 contracts, and more importantly, I actually have students who trade even more. For example, we have a current student, Ron. When we met a few months ago, he was down over 30% in his trading account. And he's since recovered that loss and is no longer a scared kitty in his trading. He's moved from trading 1 contract, just like me, to trading 6. And believe me, the first time he saw what I shared with you, he was a bit overwhelmed. So, gang, be sure, stay engaged with me. We're going to tie all this together, and I'm going to show you the exact signals that have generated over 300% return over the past 14 months.